this is Tara from Phillip Securities Research. Welcome to another episode of Phillip Research in 3 minutes. In this episode, we will share our initiation on the Singapore real estate agency sector. There are currently 2 listed real estate agencies in Singapore, Propnex Realty and APAC Realty, operating under the ERA brand. And these 2 agencies alone comprise close to half the number of real estate agents in Singapore. In terms of market share of property transactions, Propnex and APAC Realty handled an average of 85% of the number of units in 2018 across all segments. Industry consolidation in the past has seen Propnex and ERA gain market share over the years. Both companies clocked in high double-digit ROEs over the years. Propnex 31% and APAC Realty 17% for FY 2018 with little to no leverage. The asset-light nature of the business and the variable pay structure of the sales force allow these companies to easily maintain or grow their high ROE. They are also resilient even in property market downturns, as they were able to match or beat the movements of the property market each time. In 2018, for example, Propnex and APAC Realty recorded a 6% and 30% increase in revenue, respectively, in spite of the 8% decline in private residential transactions. A quick look at how the industry had consolidated over the years. While Propnex and ERA have consistently been the 2 largest agencies, it was only in recent times that Propnex was bumped to the number 1 position after its merging with Daddy Realty Group in late 2017. The multiple industry consolidation exercises in the past have been a result of heightened compliance requirements and competition, as well as the need to consolidate the smaller brokerages. Bulk of the agency's revenues are generated from the brokerage segment, and these stem from across the private residential sales, HDB resale, commercial industrial resale, and leasing segments. They also generate revenue from the non-brokerage segment, which relate to the royalties received from their overseas sub-franchisees as well as their in-house property services arms. Cost of services is the largest cost component, and this is essentially the commission paid to the agent. The commission split varies between 90-10, 80-20, and 70-30, depending on the experience of the agent. For private residential sales, however, the split is almost exclusively 90-10. Here's an illustration of a transaction being carried out for a primary sale on the left and a resale on the right. The key difference is that the agency will get an additional override called the project marketing services for primary sales. Following on from there, this is a sensitivity analysis between the commission rates and market share and primary sales revenue. The market share of revenue or the move in transactions would move the top line more so than the change in gross broker commissions from the developers. One thing to note for this sector is the timing of the revenue recognition, where there can be a lag of 2 to 6 months, and this is longer for the primary sales segment due to the additional steps involved. Key risk to note for this sector is losing agent count to other agencies as well as potential disruption from tech players. In a nutshell, be it in a buyer's or seller's market, real estate agencies tend to benefit when volumes pick up across all segments. A key upside will be the eventual owning of their overseas operations so as to diversify the earnings base out of Singapore. With that, we initiate with a buy on the APAC Realty Limited with a target price of 65 cents and a buy on Propnex Limited with a target price of 63 cents. That's all for this episode. For the full report, please visit our website stockspnb.com. Do like this video and give us your comments below.